In a recent interview with Peter McCormick, investigative journalist Whitney Webb and author Mark Goodwin reveal shocking truths about how the U.S. controls Bitcoin, global finance, and the tech giants that shape our world. From Argentina's financial crisis being part of a bigger plan to stablecoins like Tether and USDC fueling U.S. debt, they expose how powerful players are manipulating the financial system. So, let's watch and break down the most important parts of the interview and uncover the hidden forces shaping the future of finance.
No, I understand exactly what you're saying, and it is true for the average Argentinian that in some cases, like, this can be a lifeline. Like, I get that, but it's important to look at the big picture here. And the big picture is that countries like Argentina and also Lebanon and several countries throughout the world have been targeted by economic warfare for a very long time. Argentina is a very good example. You could argue it began in the 70s and the 80s and with the economic policy. I mean, when Argentina was a military dictatorship, some of the financial policies they adopted were completely insane. You had a neoliberal in power during the 90s who was very bad for Argentina, in my opinion, Carlos Menem. And then you had their economic collapse in 2001, which, again, you could argue was a direct consequence of a lot of those policies, both of the dictatorship and of Menem's presidency. And then you have the IMF come in and all these other entities. And what they try and do after the 2001 economic collapse is have Argentina engage in things like debt for land swaps, debt for resources swaps. And this has been going on not just in Argentina, but lots of, most of Latin America, arguably, for a very long time. And it's a resource grab.
Yeah.
And, some of what we allude to in this piece and what we hope to allude to in upcoming reports, people that, I've written about and that Mark's written about and that we've written about together are the engineers of that expressly. And by blowing out Latin American debt in the 80s and 90s, it was a way to basically yoke Latin America to the United States or more broadly, a lot of the transnational economic interests that, are based in the United States, like Wall Street banks, for example. They engineered a lot of this. And so the situation in Argentina now didn't just come out of nowhere. And obviously, Argentina's central bank has a lot of the blame, but that also didn't happen in a vacuum. Presidents appointed the heads of the central bank that made those policies. And even someone like Milei, who's railed against the Central Bank of Argentina, put a former central bank president in a top post in his cabinet. So, these are choices that have been made by politicians. As someone who's been and reported from the ground on Argentina and on Argentinian politics, the corruption there, they just don't even, there's politicians in Argentina that don't even try to hide how corrupt they are. It's just flagrant in some instances in a way like I've never experienced anywhere else in the entire world. So I honestly think that what's happening in Argentina, yes, those people have may need stable coins because of the current economic situation, but I think it was engineered to be that way. They were engineered into that position.
Whitney Webb uncovers how Argentina's financial crisis may be less about bad luck and more about a plan. She argues that powerful groups like the IMF and big Wall Street banks have pushed Argentina and many other countries into a cycle of debt and dependence. Webb thinks this debt trap wasn't just mismanagement. It was a way to control Argentina's resources and keep its economy tied to outside powers. Now, let's hear what Mark thinks about Bitcoin and dollar's problem.
I think the stablecoin issuers are humongously important in finding places to place U.S. debt. I think they're right now the 18th largest holder of U.S. debt is stablecoin issuers, which is just outside the top 10. Tether specifically in countries, which is still less than Hong Kong, but larger than Saudi Arabia, which is pretty wild. So, they're at 140 billion, something like that, 130 billion. I'm not exactly sure today. China, Japan, they're at $1 trillion. So it's they're passing 10% of our biggest creditors in the world, these huge national interests. That's generally where you sell foreign debt, right? You sell it to countries. Now we're selling them to companies with 30 employees that, are now making billions of dollars a quarter just on interest payments from the short-term treasuries that they hold. And now we're seeing them, Tether, I think is, they really market themselves as sort of this banking the unbanked, but then we're seeing where their money is flowing and what they're investing in. And they're investing investing in
Satellogic.
satellite companies
And brain machine interfaces.
Neurotech, the BlackRock Neurotech company. And we're seeing them sort of spread out into all of these kind of other groups. Again, banking has now become really about information, and data brokers are sort of the future of Silicon Valley, and they kind of have been for the last 20 years. And we've seen Silicon Valley, like a lot of these data brokers, like a Facebook, like a LinkedIn. They're not really making. They offer a free product, so where are they getting all of this money to be multi-billion-dollar companies? Well, they're taking user data and they're selling it to advertising companies, right? That's where Google makes all its money, Facebook, LinkedIn, all of these groups. Data has now become the commodity of the world. And so now we're seeing banking companies doing this exact same play, and they're selling banking companies. I think just today it came out that like AT&T lost like 110 million, customer data, files to hackers or whatever. That was hackers. But how many people have actually, lost their data just by clicking a user agreement that they didn't read that says all of your Facebook stuff, all of your messages, all your Twitter DMs, whatever, are now kind of out there in the world to be sold and advertised against you. And I did a conversation. I had to sit down with Walter Hessert, who's the head of strategy at Paxos, which does the issuance for PayPal stablecoin. And he told me specifically that he doesn't foresee actually USDT and USDC surviving oncoming regulatory environments. And yet he still sees trillions of dollars of highly regulated stablecoins being printed in the next few years. Well, what does that mean? It means trillions of dollars of US treasuries being purchased. Ergo, we're seeing money printing, and we're seeing a perpetuation of demand for dollars and for US debt through these, this newfound just hungry hippo of US treasuries, whether it's the USDC hippo or the USDT hippo or the oncoming PYUSD hippo. They're just smashing US debt as much as possible because there's so much demand for it. And then I think the other wrinkle to this too, which is kind of interesting, is, well, creating the regulatory environment for capital requirements. And we're seeing things kind of coming out where how crypto will be regulated with oncoming Basel III requirements. They're going to basically say you need to have X amount of dollars on your balance sheet if you want X amount of Bitcoin. And as Bitcoin appreciates, you actually need to grow your dollars because Bitcoin is considered a liability on your balance sheet. So if Bitcoin goes to $100,000, $1 million, which, we're Bitcoiners, right? Of course that's going to happen, right? So when that happens, what does that mean? How much dollars is MicroStrategy going to have on their balance sheet? How many dollars is Tether going to have as now one of the biggest holders of Bitcoin as well? Xapo has like 50,000 Bitcoin. Coinbase Custody has, 500,000 Bitcoin or whatever. The ETFs now, BlackRock, 400,000 Bitcoin. When that happens, how many trillions of dollars of dollars are they going to have on their books? And now we're going to see basically these fintech companies basically offer as a service, hey, we'll print you these dollar tokens that will offset the liabilities on your balance sheet, and we'll charge you a fee for it. And here's $400 billion of Tether to put on your balance sheet to offset the appreciation of your dollars. And that's enabled by the public sector. That's government regulation. U.S. government regulating is sort of the important regulatory arm of the United States. We see Coinbase Custody, which bought Xapo's custodial system, is partnered with the DOJ. They do work with the DOD. They sell the Bitcoin seized by the U.S. government. And so these players are kind of establishing, well, hey, we set this up. This is what we want. We want Bitcoin to appreciate. And hey, you're going to need to hold a lot of dollars. We can sell this to you as a service. So, Xapo basically built the custody, highly secured custody for your Bitcoin. And now we can offer you the US dollar banking that uses stable coins, and we can sell it as a service to basically offset the liabilities on your balance sheet. In the same way, you use carbon credits to offset, the lights in your, high rise for your building. You can buy carbon credits to offset those losses and be a green company. You can offset the liabilities of your Bitcoin holdings with dollar tokens.
Mark Goodwin reveals how stablecoins like Tether and USDC are shaking up global finance by becoming major buyers of US debt, almost like countries themselves. These digital dollar coins snap up US treasuries, fueling demand for more dollars and helping the stablecoin market grow even bigger. Goodwin explains how companies managing these stablecoins, often with ties to the government, now offer dollar as a service, allowing big players to hold both Bitcoin and dollars in a smart balance. This setup lets them hold huge amounts of both dollars and Bitcoin, creating a whole new financial system. Here, Webb reveals shocking links between U.S. intelligence and giant tech companies that could change how you see big tech.
Military intelligence, at least US military intelligence, using databases to come up with names of dissidents and then assassinating them. And a lot of them weren't actually dissidents, like suspected dissidents or neighbors of dissidents and all of this stuff. And then from Phoenix program, it goes, all these CIA-backed dictatorships, like, Pinochet in Chile, for example, Operation Condor, use the exact same system. And they've been building these systems with the internet even before the modern internet as we use it now existed. And so a lot of these there were efforts early on to make the companies who would come to dominate the internet. And that has happened. It's just a matter of public record. If you look at the biggest companies in big tech, I've done work about how Facebook was essentially launched as a resurrection of a failed DARPA program called LifeLog by the same person that resurrected the failed DARPA program, Total Information Awareness, one of the most insane surveillance proposals ever in US history, resurrected as Palantir. You can thank Peter Thiel for that, co-founder of PayPal. And a lot of these other companies that have become huge, Google, for example, there's a good article by Nafez Ahmed written on by Insert when he published at Insert Intelligence called "How the CIA Made Google." If you look at a lot of these companies, you will find intelligence agencies at the beginning. Palantir, I mentioned earlier, took In-Q-Tel money, developed very closely with the CIA. It began at PayPal. It's a PayPal spinoff, Palantir is. Oracle, another huge company in Silicon Valley. Larry Ellison, before he started Oracle, was working on Project Oracle at the CIA on databases and was the infrastructure for Oracle as we know it now. A lot of these there's been a lot of symbiosis between intelligence agencies and these big companies for a long time, and they couldn't have done it without venture capital. And that's arguably why the CIA launched In-Q-Tel in the late 90s, because they wanted to become big players in Silicon Valley. Because when you decide who the kingmakers are. Well, there's a lot of things actually to be said about that. So what I mentioned earlier about like Total Information Awareness, this is a program that was just deemed so insane in the early 2000s that essentially every mainstream media publication railed against it and rights group railed against it. But then when they relaunched the same program essentially as a private entity, as a private sector entity, no one complained. And so the CIA for a long time and other intelligence agencies have followed this exact playbook, specifically Israeli intelligence. When you move into the private sector, you can get away with a lot more than you can in the public sector sometimes, depending on what you're trying to do. And so there have been efforts to do that, I would argue, for a very long time. And if you look at how these big tech companies have developed, and, for example, revelations from the Snowden leaks, just like how the extent to which these private companies, how much of your data that they're selling or passing to U.S. intelligence for warrantless surveillance. I mean, they've been collaborators of this for a very, very long time. And I think there really hasn't been enough scrutiny of that. And I would really argue that a lot of these companies operate more often than not as intelligence fronts. And it's kind of gotten to the point, too, where in U.S. specifically, the people behind these very big tech, the biggest of the big tech companies, are also the main donors to the two U.S. political parties. Right. You have like Peter Thiel on the Republican side. You have Reid Hoffman on the Democrat side, and Eric Schmidt on the Democrat side. I mean, they fund our politicians and they dominate our private sector infrastructure, especially as we've been forced to be more online, specifically since the COVID era. And the goal is to have things digitalize even further and have it all be on these people's systems and have us become completely dependent on their infrastructure. And these people are in bed with intelligence. And even aside from the intelligence connections, they have a lot of dirty laundry. Why did Jeffrey Epstein have connections with almost every big tech oligarch in the United States? I mean, not enough people have bothered to ask that question. Why were so many of them subpoenaed during the JP Morgan Epstein case in the US Virgin Islands that ended up being settled? I forget how much JP Morgan paid to make it all go away, but a lot of money.
Whitney Webb uncovers how tech giants like Facebook, Google, and Palantir might be more connected to U.S. intelligence than most people realize. She explains that these companies got their start with support from agencies like the CIA, using data tracking methods that began as military tools. This close relationship, she says, has blurred the line between private business and government spying. Webb also points out that many of the same tech leaders now fund both major political parties, creating a system where our digital lives fuel a network of tech elites with deep ties to intelligence agencies. Whitney Webb and Mark Goodwin have uncovered some shocking truths that could change everything you know about money, power, and surveillance. If you found this video informative, make sure to like, share, and subscribe. Drop your thoughts in the comments below and stay tuned for more in-depth analysis. Thanks for watching.